Today, we will talk about best strategies for investing in gold. The right investment strategy will strike a fair balance between risk level and profitability. Given the many changes brought on by COVID-19, finding a strategy that minimizes risk and maximizes profits can seem more challenging than ever. Luckily, there are a few investments that have performed well throughout history, the most well-known being gold. That being said, learning how to invest in gold may not be at the top of your to-do list. This investment strategy can seem advanced, time-consuming, and even antiquated. However, with the right amount of research, gold can be a great addition to your investment portfolio, particularly in these times. Keep reading to learn about the best ways to invest in gold and how you can get started today. According to The Motley Fool, about half of the world's current demand for gold comes from jewelry, with another 40% being the demand for physical gold investments, such as coins and gold bars. Both investors and financial institutions purchase physical gold for these purposes, and most recently exchange-traded funds that buy gold on behalf of investors. The leftover demand for gold typically comes from the technology and medical industries. 1. Gold bullions. Gold bullion refers to any form of pure gold, with the most common example being gold bars. Gold bars must be certified for weight and purity, and will typically have a serial number attached for security reasons. Gold bars can vary in size, and it doesn't take much to be considered valuable. There are a few drawbacks to purchasing gold bullions, as you will typically want a secure location and insurance to secure the investment. Additionally, gold bullions can be a difficult asset to buy and sell, as you'd have to identify buyers ready to purchase in whatever size bar you have the asset in. That being said, many investors find this method to be highly rewarding and one of the best ways to invest in gold. 2. Gold coins. You may be familiar with the popularity of gold coins from infomercials and other advertisements. This form of buying and selling gold is well known and often more convenient than gold bars due to their smaller size. Investors can purchase gold coins from collectors or private dealers and eventually sell for a profit. Dealers are located in most cities, making gold coins easy to come by. For ease of purchase, gold coins are one of the best ways to invest in gold for beginners. Occasionally, you may run into gold coins that are marked up due to their collector's value. The collector's value can make them more expensive than the actual base value of the gold. Most casual investors will avoid these and focus on more widely circulated coins unless they are interested in becoming collectors as well. A few common examples are the US Eagle and the Canadian Maple Leaf. 3. Gold jewelry. Gold jewelry is probably the most frequently bought and sold form of gold investment, though you may not even think of it as such. In actuality, gold jewelry is highly beginner-friendly because it is so easy to acquire. According to Investopedia, about 49% of global gold production is used to make jewelry. Generally, any piece of jewelry at 14 or higher is considered an investment in gold. While it is relatively simple to obtain, there are some drawbacks to consider. In some cases, gold has a questionable resale value. This means it may be difficult to identify a buyer and sell your jewelry for a profit. 4. Gold ETFs and mutual funds. Gold exchange-traded funds, ETFs, and mutual funds are accounts that purchase gold on an investor's behalf. The shares that make up these funds each represent a fixed amount of gold and can be bought and sold like stocks. This is one of the best ways to invest in gold, as ETFs and mutual funds allow investors to work with gold without dealing with the costs of physical ownership, like security or gold insurance. There are fees associated with buying and selling gold through ETFs or mutual funds, but they are often much lower when compared to the management of other assets. Note that ETFs and mutual funds dealing with gold often invest in other commodities as well, meaning you will rarely find a firm that deals strictly with gold. This can be beneficial if your goal is to diversify, though it may require learning about other markets as well as gold. Be prepared to research different funds when considering ETFs or mutual funds for your gold investment. 5. Gold futures. Simply put, gold futures are contracts to buy and sell gold at a certain point in time. Each contract represents a certain amount of gold, and depending on the specifications can pay out in either a dollar amount or the physical gold. Gold futures can be very large, making this a strategy best suited to investors with the capital to purchase high-valued contracts. There are also options on gold futures to consider. This provides investors the option to purchase a futures contract for a preset price at a certain point in time. Options can help buyers leverage their initial investment, though they are required to pay the underlying value of the gold to fully own the option. Both gold futures and options are considered to be volatile, making them more difficult to break into and manage when compared to other forms of gold investments. 6. Gold mining companies and stocks. Investing in gold mining companies is an interesting way to combine gold investments with traditional stocks. By purchasing shares in a company that works with gold, investors can access the profits of gold without buying or selling it themselves. This form of investing can also provide lower risks, as there are other business factors at play that can help protect investors from flat or declining gold prices. That being said, investors conduct significant research when searching for the right company to invest in. There are risks associated with the mining industry that can interfere with overall profits or even bring up ethical concerns. Always do your research when selecting a gold mining company to invest in. 7. Streaming and royalty companies. Streaming and royalty companies are another way to invest in gold through stocks. These companies will provide cash upfront to mining companies for the right to buy gold or other commodities in the future. Think of them as financing companies who receive their profits in gold. This form of investment also requires inventors to learn more about the risks of gold mining and the companies associated. The level of research required to successfully invest in streaming and royalty companies can be a barrier to entry for some. 8. Buying physical gold. The numerous benefits of gold make it a promising investment opportunity. However, there are a few things you should know before trying to buy physical gold. The first, and more important, is to identify a reputable gold seller. There are countless scams out there about buying and selling gold. Not only do you want to avoid falling for a trap, you also want to ensure you avoid making too large or too small an investment on account of the seller. Review online resources to find trustworthy sellers and ask about fees and other costs associated with their work. Many of today's most popular investments do not require any special storage, but gold is an exception here. Physical gold requires safe storage. Consider renting a safety deposit box or adding a safe to your home. These costs are important to take into account when making an investment in gold, but they are completely necessary if you buy the physical asset. Depending on where you store your investment, consider purchasing insurance for your asset. This can help boost the overall security of your investment. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.